Good evening and thank you for joining us on India Business Hour. I'm Arundhati Ramnan and with me is Archana Solanki. These are the top headlines that we're tracking for you this evening. Reliance Industries reports a strong operational performance in the third quarter, helped by strong traction in its consumer and upstream oil businesses. Refining margins beat estimates. Jio's average revenue per user improves further to 178 rupees. Its retail business delivers steady growth across consumption baskets, led by groceries and consumer electronics.
Certainly, we are engaged very closely with the current shareholders and make sure that there is enough capital is brought into the company so that it survives.
Capital from the promoters, you mean?
Yes.
Telecom Minister Ashwini Vaishnav puts the onus on the promoters of Vodafone Idea to infuse capital, says government converting the company's dues into equity won't help infuse capital. That's an exclusive.
We must all understand that as a auto industry, that this is huge. You know, it's like a patient on a huge life support system almost, and it can't go on forever.
Rajiv Bajaj says e-scooters will become costlier by 30% if subsidies are withdrawn. Adds that Bajaj Auto will launch at least 6 EV products this year. He says he is not a big supporter of subsidies and calls for immediate clarity on what will happen after the 31st of March 2024.
Google parent Alphabet will lay off 12,000 people across product areas, functions, levels and regions. CEO Sundar Pichai says that they had hired for a different economic reality than the one they face today.
New age businesses continue to cut cost. Food delivery platform Swiggy cuts more than 6% of its workforce, laying off 380 employees. CEO of Swiggy apologizes and calls it an extremely difficult decision.
The Bombay High Court quashes Yes Bank's 8,500 crore rupee write-off of additional Tier 1 bonds in 2020 as a part of a restructuring exercise. Sources say Yes Bank is likely to challenge the order in the Supreme Court.
The government announces mandatory paid content disclosure guidelines for social media and financial influencers. Says they would need to disclose their material connection with a brand. Announces penalties of up to 10 lakh rupees for non-compliance and 50 lakh rupees for repeat offenders.
Aviation regulator imposes a 30 lakh rupee penalty on Air India after a man allegedly urinated on a fellow passenger. Also suspends the license of the pilot in command of the flight. Also imposes a 3 lakh rupee penalty on the director of in-flight services.
The Bombay High Court grants interim bail to Videocon Group's promoter Venugopal Dutt in the ICICI Bank loan fraud case. Former ICICI Bank CEO Chanda Kochar and her husband Deepak Kochar were also granted interim bail earlier this month.
25 years since he founded Netflix, Reed Hastings is taking a step back. Ted Sarandos and Greg Peter appointed as co-CEOs. Hastings will continue to stay on as executive chairman.
The wrestlers' protest against the federation and its president enters the third day. Wrestlers say they will not settle for anything less than the resignation of the chief Brij Bhushan Singh. Singh remains defiant, says he won't resign.
All right, let's start with the day's market action. The Lal Street failed to hold on to opening gains, with FMCG stocks being the biggest drag. Nifty and Sensex fell close to 0.5%. However, major financials lent some support. Meanwhile, the Nifty and Sensex gained for the second consecutive week for the first time in 2 months. Mid-caps underperformed, falling 1% this week.
In the commodity market, crude oil prices recovered yesterday's losses to trade mildly higher, brightening economic prospects for China and resulting expectations of a boost to fuel demand in the world's second biggest economy spurred sentiment.
The top story this evening, Reliance Industries has reported a strong operational performance in the third quarter, helped by strong traction in consumer and upstream oil businesses. We have our team of researchers to pore over the numbers, starting with Sonia Shenoy on the overall picture.
Well, thanks a lot for that. Reliance's numbers were better than what the street was estimating. It was a very strong showing in the oil-to-chemical business, while it was a steady performance coming in for Reliance Jio. Reliance Jio's average revenue per user improved this quarter to 178.2 rupees, while the total subscribers were higher compared to what we saw last quarter. The Reliance retail business, though, it did grow, but the growth is slower than what we've seen in the preceding quarter. perhaps because of a slowdown in middle-income consumption. Now look at the overall numbers. The revenues for Reliance on a consolidated basis have fallen to 2.17 lakh crores versus 2.3 lakh crores last quarter. But the standout performance has come on the operational front. The EBITDA has gone up 13% at 35,240 crores, while the margins have improved to 16.2% versus 13.6% last quarter. Even the profits were better than street estimates, up 15.6% at 15,792 crores. If you look at the retail business as well, revenue growth has slowed down to just about 4.1%, but the EBITDA growth has been in high single digits at 8.4%, and the margins have improved to 7.1% versus 6.8%. All in all, the results were better than what the street was estimating.
Steady showing from Reliance Jio this time, a revenue growth of 2.1% on a quarter-on-quarter basis, 18 to 19% on a year-on-year basis. Margins on expected lines have expanded by 120 basis points to 52.2%, benefiting from the reduction in the spectrum usage charge, and this is driving a profit jump of 2.7%. The ARPU, that's the average revenue per user, or in simple terms, the pricing per customer, has improved for the 7th consecutive quarter, but the pace of increase has slowed down. This quarter, the ARPU increase is just 0.6% on a sequential basis. Remember, there were no tariff hikes. The last tariff hikes had taken place a year ago. Subscriber growth this quarter stands at 5.3 million on a quarter-on-quarter basis. That's the increase. But again, it's lower than the subscriber addition that we've seen over the past 2 quarters. So there is a bit of a slowdown that we've seen in metrics like ARPU or in metrics like the subscriber growth or even the overall revenue on a year-on-year basis. But still, on the whole, it's a steady showing. Margins have expanded, profits have gone up in line with what the street was anticipating.
Well, it was a good set of numbers coming in from the auto chemicals business, a top-down beat, an increase on a quarter-on-quarter and on a YOY basis. Revenues were down by 10%. That was led by the decline in volumes and spreads for the petchem business. But if we look at the operational performance, that was really strong and better than street estimates. EBITDA was up 16%, leading to a margin increase of 300 basis points. And this time around, we have seen EBITDA increasing both on a quarter-on-quarter and on a YOY basis. While the company says that, yes, in the refining segment, we are seeing middle distillate cracks which are continuing to be firm. The feedstock price volatility in petrochemical could continue because of uncertain geopolitical situation. However, they are expecting the polyester demand to pick up from here because of the change in China's zero COVID policy and higher demand as well. That's about auto chemicals business. Even the exploration and production business did really well this time. Revenue growth of 16%, EBITDA growth of 22%, and margins increased by 500 basis points. Well, this EBITDA number is the highest that we've seen in last 5 quarters, so that worked really well for the company. And they say that they expect gas prices to continue to remain firm because of constrained supply and geopolitical issues. They are also talking about how EBITDA will be supported by higher production and higher volumes as well. So on both the segments, auto chemicals and oil and gas, it was a good showing from Reliance.
So a strong showing there from Reliance in the 3rd quarter. But a quick look at the other headlines that we're tracking for you. The Bombay High Court has granted interim bail to Videocon promoter Venugopal Dut in the ICICI Bank loan fraud case. Other co-accused, Chanda Kochar and husband Deepak Kochar, were granted interim bail earlier this month. Now, the High Court has said that the reason cited by CBI behind Dut's arrest was quite casual and without any substance.
Staying with the Bombay High Court has set aside Reserve Bank of India and Yes Bank's decision to write off additional Tier 1 bonds worth nearly 8,500 crore rupees. These bonds were written off by Yes Bank as part of the 2020 bailout scheme to rescue the bank. This upset the bank's bank holders, which includes retail investors and mutual funds, leading them to challenge the matter in the court. While the ruling comes as a setback for the RBI and Yes Bank, sources have told CNBC-TV18 that the bank will file an appeal against the Bombay High Court order in the apex court soon. The order was only pronounced orally today and a written copy is still awaited. The court has granted Yes Bank 6 weeks to implement the order.
In what comes as a relief to Torrent's investment, the National Company Law Tribunal has ordered a status quo on Reliance Capital's second round of auctions until final orders are passed. Remember, Torrent Investment won the first round of auction and had approached the NCLT seeking a stay on new auctions. The tribunal has granted time to Torrent to submit its reply in the matter. This essentially puts on hold the second round of auctions for Reliance Capital that was scheduled on the 23rd of January.
Meanwhile, Telecom Minister Ashwini Vaishnav has put the onus on the promoters of Vodafone Idea to infuse capital in the company. In an exclusive interview with Shirin Bhan at Davos, Telecom Minister further said that the government converting the Vodafone Idea's dues into equity won't help infuse capital.
One of the vexed issues which continues to be on your table is the issue of Vodafone, and that has been on now after the government's approvals for the conversion of debt to equity. It's still waiting for a final decision on when that, if at all, and when it will go through. What's holding back that call at this point?
See, Voda needs capital. For capital to come in, capital has to come in either in form of equity capital or debt capital. Conversion is a non-cash transaction. Non-cash transaction is not going to bring capital. So what's important is that this is a very complex issue. I wouldn't like to comment more than this, but certainly we are engaged very closely with the current shareholders and make sure that there is enough capital is brought into the company so that it survives.
Capital from the promoters, you mean?
Yes.
The centre, we learn, has no plan to lift or relax the export ban on wheat or broken rice. Meanwhile, Food Secretary Sanjeev Chopra tells us that they are observing the rise in wheat prices. Take a look.
Is there any plan from the government side to revisit the export ban which was implemented last year on wheat? Is the government conducting any meetings in this regard on the availability and supply of wheat?
So we are observing the situation closely. We are aware of the market prices, and at an opportune time, very soon, we will take a decision what we are going to do to ensure that these prices are cooled.
All right, shifting focus now. The wave of tech layoffs continues in 2023. Google's parent, Alphabet, is the latest tech giant to reduce its workforce. It is laying off 12,000 employees. Not just that. Back home, Swiggy too has announced plans to lay off 380 employees. My colleague Shilpa Ranipeta joins us with the latest. Shilpa, what is the detail?
Google's parent Alphabet is the latest to join big tech layoffs. Now, in an internal email that we saw, CEO Sundar Pichai said that around 12,000 employees across product areas, functions, levels and regions will be handed pink slips. While US employees have already been informed, the process will take longer in other countries due to local laws and practices. Now, why the layoffs? Pichai said that the company saw periodics of dramatic growth in the past 2 years, and to match that, the company hired, but for a different economic reality than the one that we face today. But it's been forced to make tough choices as part of the rigorous review as it looks to capture the opportunity ahead and ensure that the people and roles are aligned with Alphabet's highest priorities. Now, employees in the US will get severance pay, 6 months of healthcare, job placement, immigration support, amongst others, while support for those impacted outside of the US will be in line with local practices. We're yet, however, to ascertain the impact on Google's India workforce. Now, in other layoff news, in India, Swiggy too is laying off 380 employees. Again, this is a result of overhiring followed by a slowdown in the growth for food delivery. It also has shut its meat marketplace as the company tightens costs. Back to you.
All right, Shilpa, many thanks for those details. Now, KTM India rolled out its 1 millionth motorcycle in India from the Chakan plant. The company operates in partnership with one of the leading two-wheeler makers, Bajaj Auto. Speaking about India's e-mobility push, Stéphane Pierre, the CEO of KTM's parent company, Pierre Mobility, says electric vehicle manufacturing is a loss-making business due to the high cost of batteries. Take a look.
We as KTM, we are the pioneers in the electromobility. Already 2013, we launched the first off-road electric-powered motorcycle, with a high-voltage concept. And throughout the last decade, we learned what's working in electric and what's not working. Meanwhile, even on a scooter, which I would say is 3 kilowatt-hour battery pack, it's a losing business. You're losing money on that. Production costs are higher than the retail price.
And speaking at the same event, Rajiv Bajaj said that e-scooters will become costlier by 30% if subsidies are withdrawn. Bajaj said that he is not a big supporter of subsidies, but called for immediate clarity on what will happen after 31st of March 2024.
I mean, we've gone from BS nothing to BS 6 and Euro 5. Was there any subsidy? There was nothing. So, in principle, when I say that I am not a fan of subsidies, I mean, I can't say I'm against subsidies. Now, if overnight all vehicles were to become EV, do you think the government is going to sit pretty at 5% GST? I don't think so. So, if you put it all together, it's a lack of rupees. So, we must all understand that as a auto industry, that this is huge. It's like a patient on a huge life support system almost. I would only say that the important thing is to have absolute clarity on this. Because sometimes, unfortunately, decisions are taken which are sometimes retrospective, sometimes just with a 3 months notice, sometimes even with 1 year's notice. But 1 year's notice would not be sufficient.
If this famed subsidy is lifted, that could immediately add a 40,000 cost.
45,000 to our scooter at least.
To electric scooters, and that probably could disrupt the market.
Oh, it is bound to, because we are talking of a 30% increase in price for scooters like ours.
Welcome back. You're still with us on India Business Hour. Consumer Affairs Ministry has released guidelines for social media and financial influencers. As per the new guidelines, influencers need to disclose in case there is a material connection with the brand they are promoting on social media. Now, as per the guidelines, disclosure should be placed in the endorsement message in such a manner that they are clear, prominent and extremely hard to miss. The Consumer Affairs Ministry has emphasized on the usage of words like paid promotion, paid advertisement that needs to be included in the video. The new norms also include a penalty clause of up to 10 lakh rupees for non-compliance, and repeat offenders could face a penalty of up to 50 lakh rupees. Their accounts could also be suspended for anywhere between 6 months and 2 years.
Ours are general guidelines for anybody who's influencing the buying behavior of a consumer. Now, you're talking of a specific subsector of finance, and I'm also aware that the other guidelines are being prepared, and they will be in harmony. It is like whatever we do is in harmony with the Information and Broadcasting Ministry when it comes to public disclosure.
How will you come to know that who is violating these guidelines?
So, under the Central Consumer Protection Authority regulations, anybody can complain. We can also take suo motu cognizance. So like in any other law, so it has to be brought to the notice of the enforcing authority, and it can be anybody.
What kind of deterrence or penal clauses are there in these guidelines? Can you suspend any account? Will you report about any account, whosoever is doing these violations, and any monetary penalty?
So violation of any guidelines of misleading and advertisement under which these guidelines have been issued, CCPA can impose a penalty. CCPA can, on repeated offences, CCPA can ask the endorser or the celebrity, prevent him or her from doing it for X number of months or years.
How many months?
Yeah, I think it is 6 months, but we'll need to check on that. Yeah.
And a maximum of 2 years or something, you said?
Yeah. Yes.
When it comes to overall guidelines, they are under CCPA under which particular mandate? Will they come under advertising mandates or what?
So it is under the overall umbrella of Consumer Protection Act, and one of the principles of the Act is that unfair trading practices cannot be resorted to. And one of the corollaries of unfair trading practice is misleading advertisements cannot take place. And since this is a new form of advertising on the digital media and social media, so this comes under the misleading advertisement domain.
All right, moving on, a major decision in the Air India urination incident. The DGCA has imposed a fine of 30 lakh rupees on Air India. The Air India the Air Safety Regulator also suspended the license of the pilot in command of the flight. The Director of In-Flight Services has also been fined with 3 lakh rupees. Air India said it has acknowledged the gaps in reporting of this incident and is working towards addressing those gaps. The DGCA's decision comes a day after Air India banned the accused passenger for 4 months.
And Adani Cement has written to the Himachal Pradesh Permanent Standing Committee and said that since it is the trade unions that decide freight, truck routes and truck assignments within the state, this has led to high freight rates, excess truck capacity and low truck runs. Sources tell CNBC-TV18 that in a bid to end the impasse, Adani has proposed to reduce trucks for Ambuja and ACC to 500 in 3 years, impose an immediate moratorium on adding new trucks, among other things.
And with less than 2 weeks to go for the union budget, expectations are running high that the budget will be election-oriented. However, it will also be closely watched for the government's stance on fiscal consolidation. Sapna Das finds out that the government will try to deliver on consolidation, but challenges remain.
The latest advanced estimates for nominal GDP no doubt will help the government's fiscal maths. The revised estimates for the current fiscal will now be pegged at 273 trillion rupees, pushing this year's deficit lower than the target of 6.4%. Although in absolute terms, the deficit will be larger than the budgeted 16.61 lakh crore rupees due to extra expenditure incurred by the government. For the FY24 budget, the government could estimate the nominal GDP to grow at slightly over 10%. On the revised base, the deficit will be pegged lower than 6%. It could even be between 5.7 to 5.8%. However, penciling the fiscal deficit at 5.7% or even 5.8% will not be an easy task. This is because tax revenues are widely expected to grow at a slower pace than this year, while expenditure cannot be reduced. The government will also need room for higher capex and probably additional headroom for any tax relief measures or scheme that it may announce as a run-up to the elections. Even something as basic as maintaining a contingency buffer will need resources. This leads us to the government's commitment to bring the deficit below 4.5% by FY26. Pegging the deficit at even 5.7% for FY24 will make achieving that roadmap challenging, as it could translate into a significantly aggressive fiscal consolidation over FY25 and FY26. Either that or the government could shift the fiscal goalpost.
All right, Sapna, many thanks for those details. But with that, it is a wrap on this edition of India Business Hour. Many thanks for watching.
Stay tuned to CNBC TV.